In today's video, I'll show you how to use the 9 EMA and 20 EMA with price action to find high probability scalping trades. First, let's clear up one common mistake. If you're taking trades based only on an EMA crossover, you've probably experienced fake signals before. The EMAs cross, you enter the trade, and then the market immediately reverses. The problem isn't the EMA. The problem is that an EMA crossover alone isn't enough. When you combine it with price action, your trade quality improves dramatically. Today, I'll walk you through the entire strategy step by step on the chart. You'll learn exactly where to enter, where to place your stop loss, and when to take profits. Let's get started. Now, step 1, set up your EMAs. Open your chart and go to the Indicators section. Add your first exponential moving average EMA and set the length to 9. Choose any color you like. I use black because it's easy to see. Now add a second EMA and set the length to 20. I use red. Now you have 2 moving averages on your chart. The 9 EMA reacts quickly to price movements, making it the faster moving average. The 20 EMA moves more slowly and often acts as a dynamic support or resistance level. When these 2 EMAs cross, that's where our trading opportunity begins. Buy setup. A high probability buy setup requires 3 conditions to align. First, the 9 EMA must cross above the 20 EMA. This tells us that short-term momentum is turning bullish. Second, a bullish price action signal should appear around the crossover. This can be a bullish pin bar with a long lower wick or a bullish engulfing candle where a large bullish candle completely engulfs the previous bearish candle. Third, price action should confirm buyer strength. That means price is holding above a recent swing low, respecting a support zone, or breaking above a previous swing high. When all 3 conditions align, you have a high probability buy opportunity. Look at this example. The 9 EMA crossed above the 20 EMA. At the same time, a bullish engulfing candle formed while price was holding above a support zone. Everything lined up perfectly. The entry was above the high of the engulfing candle. The stop loss was placed below the low of the setup. The profit target was at least a 1:3 risk-to-reward ratio. Tax sell setup. The sell setup is simply the opposite. The 9 EMA must cross below the 20 EMA. Around the crossover, you should see either a bearish pin bar with a long upper wick or a bearish engulfing candle that completely covers the previous bullish candle. Price action should also confirm weakness by rejecting a resistance zone or failing to break above a recent swing high. Here's an example. The 9 EMA crossed below the 20 EMA. A bearish confirmation candle formed near resistance. This gave us a clean sell setup. The entry was below the low of the confirmation candle. The stop loss was placed above the high of the setup. The target was at least 1:3 risk to reward. The high probability top-down strategy. Now let's combine the higher time frame with the lower time frame using a top-down analysis approach. Start with the 15-minute chart. Check the position of the 9 EMA and 20 EMA. If the 9 EMA is above the 20 EMA and both moving averages are sloping upward, the higher time frame trend is bullish. Price action should also confirm the trend by forming higher highs and higher lows. If that's the case, your market bias is bullish. That means when you switch to the 1-minute chart, you should only look for buy setups. Ignore every sell signal, even if it looks attractive. Trading against the higher time frame trend is one of the biggest mistakes new scalpers make. Now move to the 1-minute chart. Keep the same 9 EMA and 20 EMA applied. Suppose the 9 EMA was below the 20 EMA, but then crosses above it. At the same moment, a bullish engulfing candle forms. Now every condition is aligned. The 15-minute trend is bullish. The 1-minute EMA crossover confirms momentum. The price action confirms buyers are in control. This is the high probability setup we've been waiting for. Enter above the high of the bullish engulfing candle. Place your stop loss below the lowest point of the setup. If that low breaks, the trade is invalid. Exit the trade immediately without hesitation. Aim for a minimum 1:2 risk-to-reward ratio. For example, if your stop loss is 10 points, your minimum target should be 20 points. If momentum remains strong, you can extend your target toward the previous swing high. As you can see, price moved higher and reached the target. Not because of the EMA crossover alone, but because the higher time frame trend price action, and EMA confirmation were all pointing in the same direction. Everything was aligned. That's what creates high-probability trades. This strategy is simple. Identify the trend on the 15-minute chart. Wait for an EMA crossover and price action confirmation on the 1-minute chart. Trade only when everything aligns. If you found this video helpful, don't forget to hit the like button. Subscribe to the channel if you haven't already. Here, we keep trading simple, practical, and effective. Thanks for watching, and I'll see you in the next video.